That's interesting. I've thought over the last couple of years, especially because, like you say, equity was coming in. I didn't see equity on a note I was buying until 2018. I think that's the first time I ever saw equity,
Right.
and it's continued to grow since then. And that's been my hunch, is that a lot more of the second liens are being created because of all that equity spread. So that kind of confirms
Right
my
now they are. Yes.
hypothesis.
And
Yeah.
I'll say the end of the third quarter, it was quite slow on the
Mhm.
trading side, and the beginning of the fourth quarter was slow. And
Okay.
all of a sudden, in the last 2 months, it started to pick up again.
Interesting.
So I'm hoping that's going to flow through to next year.
Yeah.
I mean, I
So
think you guys did see the deals that I just put out recently, so it's starting to pick up once again.
yeah, what have you seen for sellers in the ideas of what is their expectations right now? Where do you think sellers are at? And is there a gap between where sellers are at and where buyers are at?
Well, you know,
Or is it grown or shrunk? I guess a better question.
I don't think it has changed.
Okay.
I think it's only changed the perception as the buyer feels that the seller's not coming down to their level of purchase price. So of
Mhm.
course they're going to feel that everything is overpaid for. Um, the the block is going to be where the pricing is going to be higher because for the example I gave you where these guys are coming in and paying aggressive numbers just to get the funds out. So,
Oh,
you
yeah.
know,
Mhm.
they have no problem with we which a lot of people don't understand is paying against legal balance due compared to unpaid principal balance. So
Mhm.
if they're paying aggressive on a legal balance due, the odds of them trying to go out and sell those assets to someone else, to the medium and smaller guys, it's a transaction that just can't get done unless that next buyer is saying to themselves, all right, well, my return hurdle back then was 20%. Right now, I'm going to be happy with 12%.
Mhm.
And so there's deals to get done, but there's no deals if you're still pricing and trying to, I guess, grab that return that you expected last year.
Gotcha. So,
That's interesting.
what are some of the big mistakes sellers do or expect, or if someone wants to list assets with you guys, what are some of the big mistakes that they make currently, or you've seen?
On the seller side.
Yes, on the seller side. Is there
So
mistakes that you commonly see?
yeah, on the seller side, some of the mistakes are um, they're they're listing non-performing loans as a classification, but they're actually assets that are uh, could be making payments to a bankruptcy plan or a restructure or a modification. And so what that does is it takes that loan out of the hands of someone that thinks that they're buying off the tape a non-performing loan. Because
Mhm.
that when they see that the payments are actually coming in, they may not be to the term, but the payments
Hmm.
are coming in. They don't want to be. They're not in this to buy a loan just to cash, just to collect the cash payments. So that seems to be an understanding of the seller side where they're saying where they could probably do a better job in classifying the assets not as a true non-performing asset where someone may get control of the property to someone that says, you know what, I'm going to have to work with the borrower and collect payments for the next 3 to 5 years.
Gotcha.
Um, and then documentation, a lot of times that they just don't take the time to go through the portfolio and say, all right, do I have original notes, original mortgages? Because that'll stop a deal for a lot of like if someone is buying it for the direct RA account, that probably will stop a deal because they have to have certain hurdles that they must hit
Yeah.
before they can fund on the transaction.
Are
Um,
they are they being priced at non-performing prices?
yeah, they are actually. Yeah.
Interesting.
I
So
think
it
Hmm.
could be
I
an
think the
opportunity.
seller's expectations are
Yeah.
fairly in line where the market is.
Gotcha.
Okay.
Because I don't see them selling assets or asking me to list stuff on the desk anywhere near par and above, unless it's a special asset that once I send you the tape, you can clearly see that, it's going to be like a rate. If someone has a rate of 15.5% and the equity is an LTV of 30%, it's obvious that they're looking for a par.
Yeah.
bid.
So we have some few questions coming in. I'm going to define par real quick. Par is the amount of the balance of the loan that's due. That would be considered par. Another question from Rich was a non-performing. A non-performing note, it says non-performing would be a property and pre-foreclosure count as non-performing. Yes, it can be, right? That's a kind of a parameter, but non-performing means that the borrower is 90 days delayed, that it haven't paid 90 days, and you can start legal. So that's technically, they can be, if they're 2 months delayed, they're technically non-performing, but you can't do any kind of legal action until it's 90 days past due. And that's when they consider it in our world non-performing asset. There are some that are rolling 60s and whatnot, and they call them sub-performers. But yeah, unless you can file any kind of legal suit. And understand that when you're buying these notes, these are all pre-foreclosures. These are borrowers' debts on books. So those who are looking for REOs or pre-foreclosures, you may never see these assets ever because the legal process hasn't begun yet. So hopefully that makes sense. Rich, thanks for the question.
So
Yeah,
technically, even a
and that
performing
also,
note.
someone would take a look at a tape, and if they're looking for an REO, they should be looking at the tape occupancy rate. The occupancy should be vacant. A non-performing vacant property will get you an REO sooner than an occupied would.
Yes.
Most of the time, but even then, sometimes I've had it where I thought it was vacant, and then I bought the note, and then all of a sudden somebody shows up, and I was like, oh, somebody is there. Okay, and then it just changes the strategy and information that you didn't have previously, but that can throw a wrench sometimes.
Yeah. So let's switch gears here. I know everyone wants to know these questions. What are some of the big mistakes the buyer side of this space is? And what are some of the things that those who are either in the space already or want to get into it should make sure that they don't do when making offers and looking at assets?
Yeah, it's presentation of professionalism. You've got to present yourself in a way that you're looking to do what you say you're going to do. You know what you're doing. You feel comfortable in what you're doing. And it's not just a spur of the moment where, hey, I'm just going to try to go buy notes tomorrow because it sounds fun. And that's why, I do believe in your group and others that the mentorship is important because I feel I'm comfort from my side. I'm going to feel a lot more comfortable knowing that someone spent the time and money to work with a group to understand the entire process. Because in the past, I've kind of opened it up to really everyone in the beginning. And that was more of a function of just to allow them to see what this market's all about. And hopefully they would have asked more questions of me before they would just, throw in an offer that they did not want to stand behind. It was just more of a, hey, I made an offer on a note.
Going dark, right? That's another phrase we use a lot, where a buyer will make an offer, seller will counter, and then at one point or another, the buyer goes dark. And I would think that most buyers who go dark, they don't agree with the numbers, but at least communicate that back. And the other thing I see often, and I'm sure you see as well, is I want to make an offer of 50,000, and tomorrow I say, "Oh, make it 40,000," and they change their offer without any kind of justification. What are some of the common justifications you can fade, quote unquote, fade a bid on that a seller and professionalism respects?
Yeah. So when you get that notification that you've been awarded a loan, your next task is to perform your own due diligence to verify what the tape said is what you're getting back. So we use the BPO valuation and the tax and title report. So you're running the BPO to verify that when I gave you the indicative bid, you said the property was worth 100,000. I'm coming back with the current BPO of 70,000. So instead of like you just said, someone saying, "Oh gosh, I'm 30,000 less than the tape. I'm not gonna let them know. I'm not gonna answer the phone. I'm gonna hide." You know, all that's necessary is to come forward and say, "You know what? Our valuation came back at 70. Based on the new value, I'm going to have to be at a price which would be the same percentage really what
Yep.
against the 100 was. So if you were 70% of 100,000, you're really going to be 70% of now 70,000. And it's my job or our jobs now to present that to the client and say, here's the actual BPO they ran. It's a real number. If you ran it yourself, you're going to get the same BPO. Here's why their bid now has gone down from 70,000 to 60,000. And
So
as I tell them, 9 out of 10 times, they're going to look at that and say, you know what? I can accept that. We can still move forward.
Or say, you know what? No, I don't accept it, and that's justifiable. No harm,
Right.
no foul.
Or no, I can't accept it. And here's another BPO. You know what? I can come down maybe 5, but I can't come down 10 grand. And then the person on the other side says, you know what? I think I actually can come up 5. So there is a transaction there.
yeah.
And the same thing with the tax and title. You come back with some past due taxes. They all know that it comes off the purchase price. If you come back with an issue that says that, wait a minute, there's a loan ahead of this that was never released or subordinated through my findings, what's going on. A lot of times the client will have that somewhere in a vault or whatever, and they'll show you that, oh, look, we didn't give it to you by accident. Here is the subordination. So a lot of things can be answered, but they can't be answered if you just don't bring them up.
Yeah.
And
So
I'm
we need
always
to
amazed
unpack a
how many
couple of
times,
things there.
and I know David doesn't like this, but I'm always amazed how many times I get emails without a phone number to call.
Yeah. Yeah.
I need a phone number to
Yeah.
call someone.
Deals get done over the
Absolutely.
phone. Absolutely.